Hello, everyone. All right. So Gemma just introduced our panelists briefly. Sorry, before we start, maybe the volume is a bit strong, isn't it? Is it okay for everyone? Okay, all right. Sounds very loud. So, very pleased today to have P from SOSV, Lena from Planet A, and Lise from Vsquared Ventures. So, as you can guess, we are here with an investor panel, basically, to talk about how policy shapes or not deep tech, frontier tech. So there's certainly a lot of policy flying around these days, and it's certainly having an impact on the traditional stock market. Now we'd like to discuss and share with you how it applies to frontier tech. So before we start, maybe I will let the panelists introduce each other. Maybe Lise?
Sure, very happy to be here. I'm one of the partners at Vsquared Ventures. We're one of the largest deep tech funds in early stages in Europe. We've been around since 2016, investing across the board in deep tech areas such as space, robotics, AI, manufacturing, green transition, tech bio, new compute and sensing. Yeah. That's us.
Thanks, Lise. Lena?
Hi, very nice to meet you. My name is Lena Thiede. I'm one of the co-founding partners at Planet A Ventures. It's a Berlin-based green tech early stage investor, investing in European startups that have a significant positive impact on the environment while building global businesses. And we have a very scientific approach to how we look at the world. So we have an internal science team that calculates life cycle assessments to really understand what is part of the solution and what is not. And we invest across all sectors, manufacturing, energy, software, as well as hardware, early stage. Thanks.
Thank you.
I'm Pei Wu. I'm one of the general partners at SOSV. We are a global early stage deep tech fund, and we focus on investing in human health and planetary health and industrial independence, which we've been doing before it became cool. And we are deploying out of our fifth fund right now, which is a $300 million fund.
Thanks. Industrial independence, that's a good one. We'll come back to it. So myself, Jérôme Moreau, I'm from the Boston Consulting Group, where I have the pleasure and honor of leading our deep tech consulting activities. So let's get started, because the name of this panel is policy and how it shapes frontier tech. And that's pretty wide. Of course, we're going to start with a few definitions, but ideally practical ones. So Lise, maybe what is the policy type that you think influences most frontier tech?
I think there's a lot.
Yeah,
we can talk about startup policies,
yes.
We can talk about specific policies towards green transition, etc. I think in the end, taking a step back and looking at maybe the problem and as well as the solution to technology in Europe particularly is technology spend. I think what we're seeing today is a massive need to shift both within industry, within public, within how we are acting ourselves as individuals. We're seeing it in Germany today, for an example, with Merz, that has a very unique policy right now where we're amending the debt brake. We're talking about hundreds of billions of investing in energy infrastructure, in defense, etc. I think these are the big shifts that we need to think about, not just defense spending as part of GDP, but if we actually look at technology spending as part of GDP, it's way below. I mean, I think US is at 0.5% and Europe is way behind. And these are the real drivers that we need to address. If we think of the Draghi report, looking at the need for building independence in Europe, the need to become a tech leader, the need to become more efficient and increase productivity, I think all of this can actually be addressed with more spending in technology. And we're not just talking about early stage deep tech companies, we're also talking about corporates, we're talking about policies for increasing pension fund spending into early stages, about corporates shifting towards an innovation mode and actually starting to acquire companies, build out R&D. So I'm probably now describing a lot of different policies, but in the end, the common denominator is really a bold policy around technology spend. And I think that is key right now, and we really need to step up to this challenge, because otherwise, I think in Europe, the whole liberal economy and liberal democracy might be in danger.
Thanks. And I'd love to hear also from our other speakers, but it's a bit strange when people have this image of startups, you know, moving fast, breaking things, and essentially not being attached, beholden to governments and, you know, going faster than bureaucrats. It almost sounds as though you're welcoming it, you know, to some extent, which is not an issue, but maybe let's continue with the other panelists. Lena, what do you think? Which one is most impactful for your own portfolio?
Yeah, so what we are obviously seeing is a seismic shift in politics at the moment, and politics is on everybody's mind. And I don't think you can overestimate the impact of politics and policies on deep tech and green tech and other frontier tech. And I also wanted to highlight that you need a strong policy framework for the innovators to be able to compete with the entrenched fossil-based incumbents. And we have been very bad in pricing in the externalities, and so it's not as if we had a level playing field that then policy distorts. It's a very distorted level field anyways. And so what I see happening and what has a tremendous effect on our portfolio and green tech at large is that for the very first time in Europe, we think security, competitiveness and decarbonization together, and I find that super promising. And just look at the clean industrial deal that came out 2 weeks ago. It's very influential, it is very concrete. There is a lot of counter guarantee facilities in there for PPP off-takers, for clean tech at large, and for manufacturers. There is a new push for a capital markets union. There's even a new commissioner for startups that has never been there. So I think the message has arrived in Brussels that green technologies are not only interesting to get us to net zero, but it's also super relevant in terms of resilience. And I think that will make the case for many of our portfolio companies stronger.
Thanks. And maybe, given you're from the US, you might have a different or completing point of view. What do you think?
Well, obviously, we have experienced a pretty severe amount of whiplash in the US, and certainly across deep tech and in the climate tech space. we have transitioned from an administration that passed signature legislation like the CHIPS and Science Act and the IRA that in combination were releasing over $150 billion in incentives for reshoring chip manufacturing in the US, as well as deploying and developing new climate-related technologies in the US. We're now seeing a lot of those incentives being rolled back, and I think what we in the US have not done very effectively until recently was actually bringing about like a real coherent industrial policy. And so now with the new administration, I think threatening to roll back a lot of those incentives, we're seeing a lot of climate tech companies and even some of the incumbents on the chip side having to rethink their business models and contemplate whether those incentives were propping up their businesses or if they were able to actually compete on the open, quote unquote, open market against fossil industries. So, the U.S. philosophy on industrial policy, I think, has always been a combination of market shaping through incentives as well as some regulation. Obviously, Americans are kind of allergic to regulation, and so these market shaping policies, I think, put a lot of wind in the sails, especially in the climate tech space, over the last 4 years. For our portfolio specifically, we have always been very cognizant that the companies that we invest in, especially in climate tech, need to be able to stand on their own 2 feet in the market. As a result, we've always invested in companies that did not depend on any tax credits or subsidies, and would be targeting price parity or being competitive against some of these legacy industries. So all in all, I think our portfolio, we feel pretty comfortable about this change, though it is a sea change. And I think one of the more unfortunate losses that we're likely to see is some of the later stage kind of grant and loan guarantee mechanisms that would be in place for helping to scale out these novel technologies. That said, I think the sector as a whole can be net healthier and more durable in the absence of some of these incentives. It'll be a harder slog, that's for sure, and I think many individual companies may struggle, and that is a reality.
Yeah, especially because listening to all three of you, I mean, first, you're saying it does have potentially outsized impact on your portfolio company. That upstream, the amount of investment that is shaped by public policy, that has been a difference between, let's say, Europe and the US in the past. And we were discussing actually before this panel how it's necessary to take companies often to the US for later stage investment. And at the same time, Lena, you were talking about how maybe Europe is maybe waking up, being a bit less naive, that this investment is also linked to European sovereignty, in the industrial independence, as you mentioned. So I guess, practically speaking, for the people in the room, because we have investors, innovators, how should they think, if it's possible to get into it, about making use of the policy despite those sea changes, and maybe Europe, US, Asia, where should you play in a sense, given your, it's depending on your life cycle, but any advice that maybe you could share there, practically speaking. And just before you answer, we have a Slido for everyone, so we'll continue for about 10-15 minutes, and then we'll do Q&A. So if you have specific questions, please don't hesitate. So maybe, Lise, first for you.
So many difficult questions.
Yes.
I think for every company it is different. I mean, certain companies just have to go to other markets because especially if you think of, I have a portfolio company in the genomic space, 80% of that market is happening in the US. So it's natural for us to take that company into the growth stages into the US market. And we just did. On an overall basis, though, I would wish and hope that we can build a more thriving ecosystem in Europe itself. Right now, we're still seeing that a lot of the European companies we're educating the talent here, but they go to the US to set up the company because it's better funding. Our pension funds go to the US because there's better performance of the funds over there, because there's more funding towards the startups. It's a very vicious cycle, and I think to break out of that, we need to have a bit more boldness and try to build an independent market here. So, of course, I'm a little bit conflicted, because on an individual portfolio basis, I would often recommend the companies to go to the US or other markets. It's mostly the US, though. But on an overall European sense, I would really want us, and I see the need for us to just stay here and work on recycling talent here, recycling capital here, and being more bold in terms of the investment level.
Lena, what do you think? Because you're even more than Lise on sustainable technologies, which are very much linked to the kind of EU investment policy that you mentioned. So what do you think? Are they going to stay and focus on Europe? Are they getting the right level of investment? And do they need to consider the markets with different levels of attractivity? How do you see?
I think the first thing I'd say is it's super important to understand the policy landscape and also what's coming up on the horizon, because it really shapes markets when you look at Europe. So I would say be close to policy, understand it, and even as an innovator, as a young founder, make your voice heard, because it's, I think, part of the system that the voices of the incumbents are always louder than the voices of the innovators. So I've been in touch with members of parliament in the EU, and they were basically telling me, you, as an early stage investor, you don't even exist in my universe, nor do the entrepreneurs, because I only get the incumbent steel producer that tells me don't raise the CO2 price, otherwise I will go bust. And I think we need to bring in that these viewpoints, these perspectives from the innovators that have the potential to change industries more towards the policymakers. So that's one point I wanted to make. And then I do think that historically we have been terrible in commercializing and scaling the innovation that we have in Europe, and that it's really a lost decade that we look upon. But there's a collective determination now that I feel to change it and to make it easier for an entrepreneur to bridge that famous valley of death and come up with more sophisticated financial vehicles, including venture debt, including guarantees, grants, to really make scaling easier on this continent. Nonetheless, what you said, Lise, is still very true. I think the potential is huge in the US, and that it will remain a very important market, and the technologies that we invest in hopefully turn out to be better, smarter, cheaper. So I'm quite confident that they will still see interest from US investors. In regards to China, that's very hard to tell for me. I could picture a world where China comes a bit closer to Europe, depending on what happens with the transatlantic alliance, but it's too early to tell.
Pei?
So I'm gonna do a little history lesson, because I think it's kind of interesting. We're here talking about frontier tech or deep tech, and I think the Platonic ideal of a new technology that happened kind of in the modern era was around the space program in the US. And I think it's very easy to take a historical look and presume that that was a linear path to get there. But the reality is, from the time when President Kennedy first announced the moon program to when Apollo 11 landed on the moon, it was almost 10 years, which is about the amount of time it takes for a deep tech to get into market and scale. That program survived an unbelievable amount of turmoil. President Kennedy, the champion, the CEO of the program, was assassinated, I think, 2 years after the announcement. There were, I think, 2 more presidents that it had to survive through. There was a huge tragic accident that occurred early on in the program where 3 astronauts died. And every year or 2, the program had to go back to its customer and its funders, AKA Congress, to rationalize and justify its existence. And they had to do that over and over and over again against the backdrop of a country that had gotten itself stuck in a quagmire of a foreign conflict and waning public interest and public support for this crazy, audacious, not very commercially viable concept. And thankfully, it ultimately worked. Like we got to the moon, and many, many nascent technologies flourished as a result, and in parallel with that program. And in, I think, modern dollars, about $130 billion of US taxpayer money went into making this mission a success. And I don't think anybody in this room would accuse the US of having any capacity for strategic long-term planning, because that is not what actually happened. And I think it's really a kind of funny example in the context of this conference, because if you kind of squint and look at the history of that program, it kind of looks like what a deep tech startup has to go through. Continually refining your reason for existing, continuing to speak to your customer, constantly going back to the market to get funding and prove to the capital that you need to exist and that they should participate in your journey. And so I think it's a really healthy thing to realize, like, again, this wasn't some wizardry of deep central planning and really, really strategic, long-term, coherent, stable funding. This was kind of a startup at a national level, and I think deep tech startups have to be prepared for that kind of journey and go where the capital is and know how to keep refining and work with your customers, go where your customers are. And if that means kind of not benefiting from policy, that's okay. if you can make that journey happen.
If you don't mind, it's interesting because the entire program, you could also say, was a reaction to the Sputnik wake-up call. And so from the beginning, it was around industrial and military sovereignty. And that was the backdrop, probably, for a lot of the investment, storytelling, etc. And the windfall came after. And that leads me to a question we haven't prepared. So, given that we're talking about longer-term strategic imperatives that may or may not shift in the moment, but you're saying identify them, move with them, play up, those strategic imperatives. For a startup, which ones are they? Like, if you're an innovator, what matters? Should we go with Gen AI chatbots? Is this going to feed our children, clothe us, make our houses, deal with fertilizer shortage? Is this where the money should go, or what is the market, and where do you think it will resonate with policymakers? So very concretely, and I hope it's aligned with your thesis. So maybe Lise.
I wouldn't underestimate AI.
Me neither.
I
mentioned the chatbots.
Exactly, the chatbots specifically. Well, you never know what kind of innovation that would lead to either. We have huge potential around independence, as we talked about, resilience. We need to address that with different types of technologies, whether it's new materials, whether it's working on chemicals and fertilizers, whether it's AI for material discovery, maybe even chatbots can be used for something, I don't know, productivity gains. I think, though, in terms of these policy guidance that we have today, it's better to lean on these big trajectories. We will always need more productivity.
Yes.
We are in a time where we need to build resilience and independence. I think we are in a very unpredictable world, like you mentioned, IRA, etc., kind of falling apart. Europe is suddenly shifting and becoming more aggressive, but we also see that changing from day to day. I do think it's more stable in Europe, but we can't rely on that either because we don't know how the political environment will change in Europe depending on whatever happens. So it's really hard for a startup to use policy as the only guiding star.
Yeah.
I think it is more this value creation around productivity, resilience, the real needs on an independent policy basis. I think is better.
Makes sense. Lena?
Yeah, just doubling down on that. I think those business models that rely on compliance and regulation only, we've seen that, for instance, with software that allows you to report and CSRD, and now CSRD is being simplified. That makes it very hard to follow that business model. So I also would agree that it's always back to the basics. You have to be cheaper, smarter, better. And there's a big interest in efficiency and supply chains. So the vulnerability of supply chains becomes very evident, for instance, in the food sector, but also mining and these industries. And then I think the next leap in industrial manufacturing is also something that is a very interesting market, be it how to produce more sustainable fuels for the maritime sector or the aviation sector, or how to really enable us to do biomanufacturing on a grand scale rapidly. We see a lot of innovation, especially novel materials in Europe. There's a lot of expertise in biotech where it meets up with green tech. So those are the sectors that I look on very confidently for the future.
And we have a few questions from the audience, and one of them is actually maybe linked to biomanufacturing, where the question is, in the US, China policy will drive our industrial focus. How do you see that from the European perspective? So from the European perspective, how do you see a response to China industrial policy? How is it different from what's happening in the US? Maybe Lena, because definitely we are seeing huge investments on biotech, biomaterials in China, very established base, end-to-end supply chains, so you get network scale effects. In Europe, it's more fragmented. At the same time, I heard your message, Lena, on the need to maybe have this end-to-end supply chain resilience, build it. But specifically, how do you catch up with such a large industrial base, for example, if you're going to do it in Europe?
Yeah, I think it's a huge challenge. I don't think it's going to be easy. We lost many years, and I think we kind of face a perfect storm of losing in our industrial base, while at the moment not yet fully capable of scaling what's coming up. But I do see a lot of political will and a lot of super talented founders coming into the space, saying, I want to do something relevant, this is where I want to do my next business. So I don't think it's a question of talent, innovation. It's more a question of how you said, bringing in the whole supply chain to Europe. And the big question, I do think it's possible. I think in the end, it will be a social question, because products will get more expensive if we reshore, because we will need to mine lithium then at the Rhine River and not in China anymore. So what does it do for a social and just transition is, I think, an important question.
I will make one comment, which is we're sort of talking about two entities that are on almost opposite ends of the spectrum. One is sort of government policy, and then you have three venture capitalists sitting on the stage,
yes,
which represents a minuscule amount of the total amount of like private capital that exists in the world. And I think it's really important as we're thinking about like these industrial transitions and how we're going to be able to reshore manufacturing, that it is going to take a lot of other forms of private capital to complete the journey. And those financing models are just wildly different. The incentive structures are super different. And I think we all have to get a lot smarter about how to build these companies with that new capital stack in mind. And I think governments, I will say, you know, I have a lot of friends who are still in the US government, and I think folks who work on the kind of technology side of the government have a pretty misguided view of how private capital really works, and maybe don't appreciate that not all ideas and not all technologies can form the basis for a venture-backable company. And so again, in that case, we have to start thinking about how these other forms of private capital can play in this ecosystem and do their part, frankly, to fulfill the needs that are large strategic priorities, one could even say existential issues. And and that's something that I think we have to also work with our friends in other forms of private capital too.
Maybe a closing word
Quick
for
comment.
you, Lise?
I think it's really about need and will. We are really standing in front of an existential crisis in Europe, and we haven't had that before. It's been quite comfortable. And if you think of look at DeepSeek and whatever is happening on the chip side in China, out of need and will, even if they're blocked in terms of the next-gen chips, etc., they don't have the same capital actually going into these companies. They're still able to be super smart and create something out of need and will. And I think we can do the same.
Thank you. You know, in France, we have a saying, we don't have money, but we have ideas. So maybe that is a good call for investors. Thank you very much. Thank you.
Thank you.